So just a quick breakdown of uh, VIX75, Boom 500, and Crash 500. So the strategy that I'm using to break down the chart is what we call Smart Confluence Trading 3.0, which is going to be launched this December. It's going to be launched this December. Smart Confluence Trading 3.0. This is an overall course. It covers institutional and retail trading strategies. So it's actually the best course that you can ever get for yourself. So according to the course, Crash 500, it still has this room, it still has this area to tap. I'm waiting for it to tap into this zone. That's when we can start anticipating buys. But so far, so why are we anticipating buys after it taps there? Is because of this this overall weekly change of character or break of structure, whatever you want to call it, break in market structure, whatever you want to call it. So it is because of this. After the break of market structure, the market always tap into the order block or the demand zone that broke the structure, which is this one. This one is no longer valid because it was tapped already. So this one is the one that is clear to be tapped. So this week, Crash 500 can smooth that one. That's when we're going to start looking for major buying opportunities. My TP1 that I'll most probably be looking at, I'll be looking at maybe this recent swing, either this recent swing high, this one, or this supply zone here. So TP1, TP2, TP3, something like that. It is so far. I'm still waiting for it to tap into there. Then 100, Boom 500 on the weekly. We had this resistance, broke, came back down, broke again this candle, stayed up, then retested. So break, retested. This candle managed to retest since it didn't break down below. Same as here. This one is now continuing. So I have two levels here. This level, so this one is a major support. Boom to break to the upside, targeting at least this zone here, this zone, targeting the market to tap into this zone, so it can tap into this zone. So that's why I'm anticipating beautiful buying opportunities for Boom 500. Already you can also see, even if you apply the trend lines, because our strategy accommodates everything, accommodates all the retail trading strategies as well as the institutional trading strategies. So if you apply the trend line, you realize that already it's on the trend line, it's on the zone, which is good. So if ever it comes and breaks above there, that's actually an additional. Whenever the market comes and breaks this, more buy entries on our side, targeting somewhere that level there. You can see the up. You can already see the uptrending channel on the daily. Moving on to 4 hour, right? 4 hours already. Same thing, uptrending channel. So according to 4 here, this was a break of structure or breaking market structure or change of character. After every breaking market structure, after every change in character, we always come back and that broke that structure. Just this one tapped, boom, flew. So right now, what else here can we also a break here? The breaking market structure there. What broke that structure? We're looking at this order block. So after tapping, it flies. After tapping like this, we're expecting it to continue flying because it has already tapped. It has already tapped here as well. There is a break in market structure, change of character, whatever. So two scenarios right now. I'm expecting two scenarios. Either we're going to get the buys here, right? Either we're going to get the buys here. Why there? All these three candles going to the downside can actually be an order block, one single order block. So meaning they on this zone here as well. Here we can actually get some buys for the Boom 500 as of today. The target for today would be at least this resistance here. That will be the target. If it breaks that one, we know that we're going to hold for long. Moving on to 1 hour. 1 hour, you can see that already structure broke market structure here. We broke market structure. Right. So according to the 1 hour, we might get entries either on the fair value gaps. The fair value gaps, I'm talking about this level, this level, or this level. I mostly prefer these levels because according to our strategy is to buy in discounts. Probably it can come and tap into this zone before booming all the way to the upside. So we can have our buy limits in that zone here, because that we also have, not only do we have a fair value gap, but we also have a what, an order block here. Order block, fair value gap, that's a very, very strong zone. That's a very magnetic strong zone. The market can pull back all the way, pulling back all the way there. It also would trap retail traders, in the sense that most retail traders, they are used to the fact that once we break above, they only know that once we break a resistance like this was a resistance. Once a resistance is broken, they expect a retest into the resistance, then they start buying. But having institutional trading knowledge and understanding, you actually realize that important the resistance, but it's actually magnetized towards zones like these, the fair value gaps, your imbalances. So here, two things here. Either it pulls back into this zone, I'll get my buys there. Then once I get my buys there, once it comes back above this resistance, which will not be a support, once it comes back above there and taps it as well, I'll also add more buys, then targeting that resistance as our TP. So far, first entries there, I'm expecting, and those are the two entry zones that I'm looking at for Boom 500 as of today. So VIX 75, looking at from the weekly, you realize that we have a double top, major double top neckline, which is, so this major support here, broke above, broke below, broke above. Right now it's above this zone. So most probably, so long it's still above this zone, sales are still not that much efficient. Sales are still not that much strong. So in order for us to say right now the sellers have won and they're going to dominate the market. So if this weekly candle closes above this zone, it means most probably the buyers are still going to be in control. And once we get the break of this, once this major trend line is broken, that's actually a major opportunity, a very big opportunity to buy. You buy and you can actually hold all the way. You can actually hold all the way to this zone. That is, if ever the market breaks this trend line, that is only where you can actually stop holding up until you reach this supply zone here. So if that does not happen, if this weekly candle closes below this support, it means most probably the sellers have won and you can actually continue selling all the way to the downside. So far, that is the projection. Smaller time frames, the daily, the 4 hour, the what, you realize that, right, on the daily, we have something like a break of structure, which is here. Break of structure, which might trigger some sellers. So break of structure happened here. Most probably the market can pull back into this level here before maybe going down. So it going down, it will result in the weekly candle that we spoke about. It might close below because of that fact. So this is the zone as well. Resistance block. So maybe it might retest into that zone, then go all the way to the downside. So far it's on the support. Market is on the support. We are at a major support, major daily support. Most probably one can get some buys. We managed to get some buys. So right now we just need to relax and see how the market is going to proceed. Is it going to give us more buys? We'll just take those buys up until maybe we reach this level or that level before continuing to the downside. So this is the structure. So according to the 4 hour, here as well, we broke structure there. After breaking structure, most probably, according to the strategy, we might get a pullback into this zone. Once we get a pullback into that zone, we actually buy. Once we get a pullback into that zone. So the strategy actually accommodates everything, all the retail trading strategies and the institutional trading strategies. Something like this can happen. A pullback into this demand zone. We break structure. After breaking structure, we come back, tap into the demand, then we go. Break structure into the demand, then we go. Same principle. We break structure, come back into the demand, then we go. Same thing. We break structure, then we go. So it's a principle, it's a law. These are actually the codes that many of your so-called mentors, they don't even want you to know. Because once you have an understanding of this, they're out of trading in trading. So right now, we want that once we get that pullback into the demand zone, because already on the 4 hour, we have a break of structure, which was precipitated by these initial buys, right? Initial buys, break structure, then somewhere here, this might actually be a form of liquidity, engineered liquidity or inducement, just to induce a retail out, comes back, traps them, takes all their stop losses out, then boom, after coming back into the demand zone, it flies all the way where they were expecting. That is trading. That is trading for you. So I also have this trend line here. By that trend line, it also can guide me on that bias that I'm looking forward to. Either it comes and taps into the demand, or we look for any other fair value gap or demand response on the 1 hour. Right. Why do I prefer this demand zone? Because after the consolidation, the market left this demand zone. This was the demand zone or the order block that broke this consolidation. So let me show you now what is happening on the VIX. What is happening now is this move here. It's what we call inducement. Inducement, it's a form of engineered liquidity. Engineered liquidity, this is liquidity that the smart money guys, they want to attain, they want to get that liquidity from retail traders. They know that once they establish these equal laws like this, retail traders will buy. After buying, then they'll wipe out all their stop losses, which are below here. They'll be wiped out like this. They wipe all their stop losses out. Then after wiping all their stop losses out, then they continue going to the upside. So most probably, we can actually get that scenario that I'm looking forward to. Most probably, it can go down after tapping into this supply zone. So it can tap into the supply zone, come back down. This is my trading range so far for VIX. Tap here, then go down all the way back to this demand zone. Once it's back into this demand zone, boom. As the smart traders, that's when we buy the VIX. That's when we buy the VIX exactly somewhere around this zone. Right. Between these two zones, that's where we're going to get our buys for the VIX. Between these two zones, so even if it respects this one, this demand here, we're still fine to buy them. Then all the way to the zone that we showed you according to the day. So this is what is bound to most probably happen on the VIX. Get your buys around that zone. Boom 500, we break structure, come back into the demand or this area, get your buys there or there, then all the way to the up, then you start buying. So that is the whole analysis. If you want to be part of the students that are going to be in the mentorship program for the Smart Conference Trading 2.0, that involves the smart money concept, pure price action, and all retail trading strategies and all institutional trading strategies, make sure that you hit us on the WhatsApp number in the description below.